especially now with, people running a lot of ULs in North American, and a lot of times having to go through the pyramid, blood, urine, sometimes taking 4 to 6 weeks, 2 months to get them through. And it's kind of difficult sometimes for people that are new in the business trying to get things through quicker. So there's a few products that we haven't really talked about before, or talked about too often. It's been a while, so I kind of want to bring them back out and kind of show you how to quote them. And a lot of times, for writing for a few dollars more, be a more simplified issue and be able to get through pretty quickly. The one that you just got was the Americo LifeCrest Index. This is one of Norman's favorite little products. It's a nice product because it is a guaranteed product. It runs to age 121 like most of the ULs do. It is a UL product, but it's got some pretty cool little features on it. A lot of people don't realize that besides being guaranteed at 121, it has a built-in ROP to it. So it's a return of premium, which is unusual for a UL, which is a pretty nice little product. They decided to keep this for 15, 20 years and decide they don't want to keep the policy anymore. They're guaranteed to get their premiums back in the product. So it's a pretty cool feature. A lot of people like hearing that they can get their money back. They're not going to lose it into a policy. So that is a little bit different feature from what you normally run into. It does have the no lapse guarantees you probably see on there. It runs as low as $25,000. So again, if you're looking for those simple ones that are somebody's 55, 60, 65 years old, you want to get $25,000 UL, why go through the whole process of North American doing a pyramid, blood, and urine when a North American may come out to be $71 a month and this one comes out to be $75. Sometimes a little bit easier to take the easier road, get them into a little bit better product for them that may fit them better in that issue. It does go preferred tobacco, standard tobacco. There is no subclasses, so they're going to approve you pretty much very quickly or not. It is also nice if you look at it. It's got some. You're not going to need to do blood and urine from pretty much anybody that's under 70 years old. So it is a nice little product. It's easy to go ahead and quote. Of course, I always take you back here to the same place, the resources on your ASB site, that if you need to go find companies and find where you need to go. I wanted to mention now there is a Life Back office number. So if you have any problems trying to quote any of these products, we do have a Life Back office. So if you go to your ASB reports, which is your dashboard, where hopefully most of you always log into your dashboard every day. When you go into your dashboard, that's where you can find the ASB Life Back office now. But again, if you're wondering about your products and you say, well, I don't know where to go for Americo. Again, going under your dashboard, you pull Americo, it'll pull up exactly where to go and get you right to the website. I logged in now to make it a little bit quicker and easier. Wanted to show you all, in order to quote this product, all you need to go is on the Americo webpage. You go up here and put sales tools, and it should pull up.
Scott, I have a question.
Success Center, sorry. But,
This product you can only write up to age 65?
Yeah.
yeah, the index you can. They do have another product too that you can write a little older, which is their LifeCrest SI, which is simplified issue. So they do have another product that you can do that. So, all right, you go into Americo, you go. It's a really easy, quick quitting tool. I asked Norman and said, how do you normally quote yours? This you can go on anywhere you have web access with your tablet, with your computer, your smartphone. It does work in a smartphone, nice and easy, but it's pretty simple to go and do a new illustration. You need very little information. Let's just say you had a 65-year-old female and you want to come down and do the LifeCrest Index. All that you're going to need is a little bit of the policy design, which is there's going to be standard, there's going to be tobacco, non-tobacco. Your death benefit, let's just say we're going to do a $25,000 death benefit. And how you're going to pay your premiums. We're going to do it monthly, and I want it to be a no lapse guarantee product. So that's all you're going to need to put. You can go over and push illustration and your results. That's how quickly it is to actually get a rate on it. So it's pretty simple. This case right here comes up to be $79.17. Again, you can print out this illustration which shows you guaranteed values. It does show you how it accumulates fairly quickly. So you can see how it can be an RV product. It does create value in this product very quickly. If you look at it North American, very similar. It again is about a 10% difference in price. But if you're looking at how you're going to build cash value, how simplified the issue underwriting it is, they're going to go in there and do a quick MIB and check their prescriptions and probably be in and out in about 2 or 3 days, which is much quicker than going through a 4 to 6, 7, 8 week process, depending how quickly you're on top of North American. So this LifeCrest Index is a very nice little product. I know Norman's used it a lot and had very good success with it.
Yeah, I just wanted to say a couple of things on that. They don't require medical records from the doctor. Also, if you're quoting someone who has high blood pressure or cholesterol, they're going to require a high blood pressure questionnaire, which is actually a separate form that they're going to want you to send in and have the client sign with that. Also, if they have diabetes, there's a diabetes questionnaire where they're going to want to know the A1C score and different things like that. So there's additional forms that are going to have to be sent in. Also, they, unlike North American, they require that the illustration is signed by the client.
Again, the easy part is you can go up there. No, it doesn't have the EF on this product because of that issues you need to get signed. But it is pretty quick and easy to go ahead, and you need to usually go back to a client anyway when you got to do a North American. So getting an illustration signed later on is not a big of a deal.
Norman, when you get them, you call them and get the quotes, do they email you the illustration?
Yes,
How quick is this turnaround?
immediate. Usually, by the time I hang up the phone, it's there.
Scott, can you show us other products that you can write on folks over 65?
Yeah, the SI product, sure. Let's get out a new illustration. Let's take somebody who's
76.
77. Again, the cool thing is when you put in the age, it's only going to allow you to come up with the products that they're going to allow you to write. Why did the SI go on? Issue age. The SI is only until 75. So there you go. So you're going to have to do the LifeCrest on that age or the Ultra Protector. So for that one, yeah, you're not going to be able to go into that high. But this product I use a lot in the 40s and 50s and early 60s. And again, it's a quick issue one, not going to be a big difference in price. But if you're going to get over 70, like the 75, you can do the LifeCrest. The LifeCrest is going to come out and be very similar anyway because it's got a 20-year no-lapse guarantee up to age 95.
Also, it's a good alternative for a client that you may have extreme difficulty getting medical records for.
Yeah, it is a much quicker, easier process. Alrighty. The second one that we're going to go over is going to be the Lafayette. Might as well stay with the similar type product, the Heritage 15.
Can I ask you a question on the product specification?
You only get 2 this whole session, so.
You cannot be a new one.
Okay, so I did the 4-hour class, so I'm not gonna ask that question again. Okay, so on the no lapse guarantee, it says the target premium. Does the target premium ever go up?
No.
Okay.
Nope. Alright, the second one that you're getting a handout for is through Lafayette. Again, I wanted to get you some products that were guaranteed products that didn't have a lapse on them. I know a lot of companies are writing the ULs and they're not guaranteed ULs. If you do like Rural Neighbors or Foresters or even American Amicable, a lot of these companies do have ULs. Most of them will have a 15 or 20 year guarantee on them, but that may not be something that you want to get somebody, especially if they have an underfunded UL. It may have a little bit of a hesitancy about a UL. So we want to get another product. The LifeCrest UL does very well. This is actually a full whole life product. So people are wondering, a lot of times we're doing the simplified whole life products, which would be a little bit more expensive. If somebody wants to do a $25,000, $50,000 whole life product or higher, Lafayette has a very, very good whole life, very, very good price whole life that I've had some success with. The one I'm sending out to you is the Heritage 15, which again is a guaranteed whole life product. Again, when you get on Lafayette, I just quickly bypassed it to pull up here, but you can very easily do an illustration. Again, you can always call them too. I like to know how the illustrations are run so I can kind of see how they work. But you can simply put in as much information as you want. I just put a 55-year-old male, and no, I'm not 55. So those of you that saw that.
You're close.
He's 56.
No. As you can see, they've got a lot of different products. The one that I am just highlighting for you right now is the Heritage 15. That is the full product there. They do have a nice little 10-pay life. But again, for this purpose, we're doing the Heritage 15. You don't need very much information. Let's just say we're gonna do a $35,000 whole life, 35, 36, what it is, on a 55-year-old, and you can quickly calculate results, and you can see right here for this, that policy, it's $88 a month. So again, it is a nice, if you look at the policy summary, it's going to kind of show you how the cash value. It is a whole life product, unlike UL's. Cash value will continue to build up on a consistent basis because that's the way the whole life is set up to be. It is slightly more expensive than a UL product is going to be, but if somebody says, you know what, I want to make sure that is going to build some good cash value for somebody, then this is the kind of product that's going to build good cash value.
Is it fully underwritten?
No, it's simplified. It's simplified underwriting. So you don't need a paramed, blood and urine. They may need to order doctor's records if they see something on the MIB, but if it's a fairly clean application, it's going to go through very quickly. Again, somebody in their 40s, 50s, and 60s is a nice little product. It is not going to, as you can see, the annual premium does not change. This one does pay all the way to age 100. But you can see, running this way when it was 55-year-old, age 100, it builds up pretty good cash value, $36,000 on this, so it ends up being essentially a return of premium at that point. But again, just getting out of having to do a paramed every single time, I think sometimes we run into, you know, hey, we just need to get the cheapest product that's out there. They got underfunded UL, they're paying $150 a month, they don't need to be. You know, being able to come back and say, look, we can get you into a nice traditional whole life product that's never going to change. It's going to build the cash value at a 3 or 5% rate, whatever it's going to be. You know that money is going to be in there. That's a nice safety net for people, and Lafayette has some nice products. Again, this is not the only one, the Heritage 15, but it is a very nice product. It does have some really good riders on this, so if you do ride something like this and somebody is younger with the family, it does have nice children's riders on it. It also has, if you look on there, extended care benefit rider, critical illness riders, a spouse renewable rider, so you can put a whole family on this plan. So if somebody that wants a husband, wife, and 2 kids, and they're in their 30s or 40s, this again would be a nice product that you could do that. If somebody just says, hey, look, I don't have a lot of money, I want to be able to get it for under $100 a month or something like that, you can do that, this type of product. So there are a lot of riders that you can do.
How long ago did you write this?
I'm sorry?
How long ago did you write yours?
The recent one I just did,
You don't have any old, it just pays dividends. This is one of the only ones that we offer that pays
it
dividends.
does pay dividends, yes. But if you look at the riders, I mean, look how nice and easy the riders are. You can add a spouse rider, child rider on there. It does have, I think it has waiver of premium rider for disability. A lot of people like that, especially when they're younger. They become disabled, they don't have to worry about paying the premiums anymore on the policy. So they do have that. So you have some riders in there. So if somebody's looking for a little bit more advanced, I know sometimes we run into, especially the ACA, somebody says, I want to be able to put, do you have any family plans? There aren't a lot of companies that we have that you can write the entire family on a policy. So this is one, even if you tell them, look, I like you to have separate policies, sometimes they just say, well, you know, so-and-so can put me on a family plan. Well, you can do a family plan with this. You can do a spouse and kids and put them on there and put all the details of what you need on there and whatever coverages you want. Come on. $2.5 million of coverage for the spouse. I only want $25,000. My spouse will want $2.5 million. But again, very simple. You can add the riders right on there and push calculate results. and it's gonna come right up with your results. Alright, so I had to change the spell right here, but you can see on there pretty quickly, took it from $88 to $94 in that case. But again, I want you to get on there, and the whole reason of doing these trainings is to get you thinking a little bit differently, being able to go on there and play with this and run a quote on yourself, see how they work. Once you see that, how they can build these values in there very quickly, and especially being able to add kids riders on them, add spouse riders on them, add disability riders. Not all the our UL products have disability riders. So it's got a lot of really nice riders on those things.
Scott,
Yeah.
on the deal, put the husband on it, let's say, and she died. Is the policy gonna stop for him too? That's what it's gonna work, right?
They're gonna come in and give the benefit to him, and then get a choice of getting his own policy at that point. So they're gonna come back and say, Mr. Jones, you have 60 days or whatever it is to make your decision on whatever policy you're gonna get. But again, these are both very, very simple products to do. Lafayette does have an e-app, which is great. It's the same e-apps we've been using through North American and everything else, so it is very simple to do. You can go right into it from the quote there, decide that's what you want to do, and go right to the application. When I've done Lafayette, I have done their e-app. And as you can see, there's only a couple pages of things that it asks, and that's it. It goes as an e-app. So again, very simple to do. And I'm going to do a third one and kind of change the route of what we are doing. Before we do that, I did want to let people know that the Medicare and Medicaid savings programs that were emailed out last week, I did verify that those are the correct updated rates on the Medicare and Medicaid thing. So the email that you did get last Friday, Thursday, Friday, whatever day it was, is the correct 2016 levels. So you can use what was emailed out to you. This one is not a company that probably a lot of people use. I use more than anybody else in this office, but I like how quick they are. American Amicable. American Amicable's got a couple of different products. I use them sometimes for their simplified issue products because you can do an e-app. They can sign right on the iPad, and it's usually about a 48-hour decision, so it's pretty quick. But what I'm going to show today, if my mouse works. Here we go. What I'm going to show you today is their Easy Term. Every once in a while, I know I've been asked probably about 20 or 30 times, is there a term product that we can do that's $25,000, $50,000, $75,000 that's not fully underwritten? And a lot of our Trans-American, North American, they want you to have a larger face amount term product. So this is a very nice, easy term product. I've used it a couple times. It is extremely easy to run a rate on it. It's non-medical, pretty much everything under 100,000. So it's a very quick in, 48 hour, 72 hour, turn around, come back out. Fully convertible term product. So it is fully convertible to their whole life product. So if they have a term product for 5 years, it is convertible. You know, they can convert it at any time there to their whole life product. The other cool thing is we're running out of products that have return of premium. This is actual return of premium product on the term product. So again, if you run into somebody that says they're 60 years old, or we'll put an age in here, we'll put 58 today, a male that does not smoke, and he says, you know, I just really need a $50,000 term product for my house to make sure that I can cover my mortgage or whatever it is on there. You can run you can do premium, you can add children's disability benefit, accidental death benefit, a lot of things. But if you just want to do a simple, quick, easy, in and out term product, I'm on computer. It's quick and easy on my computer.
Which one?
That's a
Oh.
two-page one.
The broke one. All of them.
Scott, have you seen any decreasing terms in any of these for true mortgage protection?
The only decrease in terms, America does have the HMO 1-year term, which is their HMO POS product. They do have a 1-year term. The decreasing terms are usually the annual renewable terms. those are usually the ones that are decreasing. I don't know of one beyond that.
Is what we're seeing right now a 20-year return on premium?
This is just a 20-year. I just quickly ran a 20-year term because most people looking at a term, 20 years is really the sweet spot.
Right.
The 30 years is a lot more expensive. The 10 years kind of a short. This one here, I just ran a 58-year-old, 50,000 term, and it came up to be $72 a month. Your return of premium is always going to be a little more expensive. So you can run the return of premium, which again is a nice product because there's not many return of premiums out there anymore. So you can say instead of 76, you pay $126 a month, and you're getting all that money back in the 20 years. So essentially, it's a glorified savings program at that point. But the term product, I've used this a few times that if somebody gets rated, somebody goes through and you try to do a North American and they come back with a table 3, you're going to end up being able to go cheaper, a simplified issue, than you would be able to on that rating. So I've run into a few times that I've gotten rated, turned around, sent it in here, and it's issued out in 2 days. So it's amazing that sometimes, especially when you're looking at these smaller amounts, and especially when you're getting people a little bit younger or somebody that's older. You got somebody that's 70 years old saying, I just want a 10-year term. It happens. Somebody that says, I've got a mortgage I've got to pay. $10,000 for a 70-year-old is going to be, $80 a month, simplified issue. And they say, I just need to get, something to cover my wife or cover the mortgage. You can still run that. Again, it's a little more expensive, but it's a product that you can run. You can sit there and run a 10-year term on a 70-year-old. There's no return of premium on a 10-year though. And again, comes out to be $128 a month. So for that guy that, it was $80 for a $10,000 policy, now at least he can get a $50,000 policy for just a little bit more, he can cover his mortgage. Again, it fits a niche. I know people were asking about something a little bit simple and quick to do. That's where you run into it. They've got a few other products that are out there. They got the simple issue term, something that Matt was talking about, but no, I don't have one that is a decreasing term on that. But American Amicable comes through very quickly. It issues in and out like that. And sometimes that's what you want instead of having to worry about, 6 weeks later or something comes back in a paramed, or even if something comes back in a paramed, having something to go back to. But there are other options. We got a circus.
Scott, I don't have the papers, but is there an age limit on this? Like youngest?
No, 18. 18. But I do like that it's fully convertible too. So if you have somebody in a 10-year term and they get up to year 8, they can convert it to a whole life product. And they can lower the face amount at that point.
20-year term is convertible too?
Yep, they're all convertible. They are all convertible. Yeah, pretty much. Yep, they're all convertible. So, questions?
We have a client that we did a North American, we did a 25,000 North American, 64-year-old female, 65-year-old female non-smoker. She actually got declined because when they did the Chloromed, her A1C score was 7.1. So she got declined.
Right.
We were doing a replacement, but I was thinking this might be a good product. What are your thoughts on that? You think?
Yeah, no, I mean, definitely, especially when you look at these lower amounts, the simplified issue on some of these products is going to end up being very similar in price. And especially if you got a decline or a rated, being able to turn around and doing something like this works out pretty well. I've done it multiple times.
Now, I have another question for you. I know some companies they'll do the research and say, hey, you got declined by another company. Why'd you get declined? That sort of thing. Is that going to be a factor here?
I haven't had too much of an issue. If they come in and say, why you get declined, be upfront and honest with
Right.
it. And because a lot of times, these products are asking the same questions they're asking on the fully underwritten.
Okay.
So fully underwritten, they're getting, blood and urine.
Well, the reason why she got declined because she doesn't even know she has diabetes. They found it out when they did it early.
And to be totally honest, if a lot of times you turn around with this pretty quickly. It's not even in the record yet anyway. So it's good to have an option. I've been declined for North American, a couple of them that have taken over to a product like this, and it's been issued out, no problem at all. So the Life Crest Index is good. The Lafayette, they want you to be a little healthier, but it's still a nice product, especially for families. And then a simple term. You're not going to write these all day long, but you run into that niche area. So I want you guys to understand that there are products that we have. We just don't run into it a whole often. But you know, the Life Crest Index, Norman's written a whole bunch of it. I know I've gotten times that I've written quite a bit. The Lafayette you may not use as much, but a lot of people are asking, like Matt said, it is a dividend-paying whole life. It is going to build cash value. It's not like a UL. It's not built just to be minimally funded. It is going to build cash value at that consistent rate, which I think the Lafayette maybe 5%. It states in there, probably in the papers. But it's going to pay at that rate, build that cash value up. So if somebody wants something to build some cash value and be consistent, that's a nice product in there. So
Just as a reference point, while he was doing that, I ran quotes compared to all of them. That original one, that Life Crest that you write, is pretty awesome. North American for 25 grand, 65 real premium was $60. Royal Neighbors or like United of Omaha final expense was like 104 or $100, and that one was 79. So it's a great leeway between North American and the
I ran quotes till about 11 o'clock last night, just comparing and making sure I wasn't missing some products, because I even do the same thing. I run into missing things that are out there, because we have companies that we just don't write as often, and they've got other products. I mean, Foresters has UL products, but you got to be careful with some of these. Some of them only are guaranteed for 15 or 20 years. Lafayette's is kind of interesting. They've got ones that you pay for 20 years, 25 or 30 years, or age 100. So they've got them from paying for 10 all the way to 30. And so they got some really interesting products in there. And especially for people, that's something else we don't do very often, is if you have a child, they want to get a child's policy and they want it to be paid up in 20 years, we got multiple companies you can do that for too. You know, somebody wants to get a kid's policy for $25,000, they want it to be paid up in 20 years. You call them 20-pay policies, 10-pay policies, 25-pay policies. We have companies that can do that, and nobody's going to come behind you and fix it, because you know what? They're not going to replace it, because, hey, look, I've been paying this 10 years, and 10 more years it's paid up. Nobody's going to replace it. That's business that's not going anywhere, and guess what? That kid's going to be, in 20 years, going to have a paid-up policy. Never have to worry about the rest of their life. So, again, just other products that are out there, just have you thinking a little bit differently. And again, you may not write them all day long, but the one that I would really definitely start to look at, especially because I know we've got a lot of North Americans being written through here, is that Life Crest Index. And like Matt said, the Life Crest Index is a nice little product that fits in between the simplified issue and the underwritten. It is right there in the middle, and it writes nicely. And you pay quickly. So for those of you that don't want to wait 2 months to get paid. Now, any other questions?
I do.
Okay.
I don't understand the fully convertible to whole. What do you mean by that exactly?
Convertible?
Yeah.
Well, if it's convertible, it means if you have a term policy, your term, let's say you have a 20-year term policy. More than likely, the whole reason for that term policy is to have exposure during that 20 years, that if something happens, you're covered. But at the end of that 20 years, like you see with Primerica policies and other companies' policies, it's not made to be, even though it may say fully renewable to age 95, nobody's paying a term policy past that 20-year period, because it just is it's way too expensive. Well, when it's convertible, they usually give you convertible to a certain date or until the last year of your policy. Usually the certain date is usually about 70 years old. So let's say if you have a 20-year policy on yourself, you come to year 18, you say, you know what, looks like I'm pretty healthy, I'm going to live a couple more years, I want to convert this to a permanent policy. You can convert it to the permanent policy. You're obviously going to be at the rates that you are at that time, but it is convertible. So why is that important? What happens if you come down with, you had a bout of cancer, or what if you had a heart attack, or you had some kind of medical issue that you can't get underwritten for that type of policy again? You don't have to go with the guaranteed policy. You can convert your current policy to a whole life with no medical underwriting.
Okay, that's all right.
And does that have, that term policy doesn't have any cash value?
No, term policies never have cash value.
Right, okay.
Yeah, your term policy,
As long as you
your term policy
convert
is
it before the 20th year, then
you can convert it to a permanent policy, which will still build cash value. That's
Is
correct.
there a minimum you have to keep it before you can convert it?
No, you can convert it usually after the first year of that policy.
Okay.
I gave you the spec page, and it tells you on the spec page, it is fully convertible, to their product. You do have to convert it to their whole life product, but it is convertible to their whole life product.
Is that something around the 18 year that they get a letter from the company? Is there any kind of red flags, or is that something
The company is not, the company is not normally gonna send a letter saying convert this,
So the client,
Because
well, the client would.
because the letter, the company's already won. You didn't die in this 20 years, I get the money back.
So they're not gonna tell you.
So the client would have to keep track and know that it's coming up on the 18 years or whatever it is.
Well, they're gonna know how long they took the policy out. They had a 20-year policy. You know, essentially the 20 years is up.
See the people I'm working with.
Yeah.
When they convert it, there's no health questions?
Nope.
And it's guaranteed that it's gonna be issued as a standard?
It's gonna be the same rate class they're in then. No health questions. Nothing's gonna change on them. So it does not matter if they come down with. Well, put it this way. I had a client that I converted their policy. I was not able to get him anything, and he had a term policy that I was able to convert it the last year. He would not be able to get any other policy besides a guaranteed issue, but we were able to convert him to a permanent policy at the same rating that he was at, and so which is pretty cool because he couldn't be able to get anything else. I wouldn't be able to help him.
At the
How did
current
the
age.
cost,
Right.
how did the cost from the term to the whole life?
Oh, it's going to be higher, of course. But if you can't get anything else, it doesn't matter.
Right,
You're
right.
able to convert. I mean, I've got two term policies. If I came down with a very, very bad medical condition, that I could convert those and make them permanent. It doesn't matter if I've got a bad medical condition. I know I'm going to die at some point. Converting it and paying a higher premium, I wouldn't be able to get that same type of policy again. As you know, once something happens, you can't get that same policy you were probably in before. So, knowing that it's convertible is a big thing. Any other questions? If not, you guys got
Thank you, Scott.
35 minutes.